Good afternoon, this is Brad Dennis with BIS Commodities in your weekly grain and macro wrap-up. This is for the first full week of November. Let's start off with livestock because that was actually the least exciting markets this week. Looking at December, cattle had about $1 range in it. We closed at the higher end of that range, 132.55 today. Not a whole lot happening in there. Here in cash bids, they're about steady to $1 lower than last week. Also, looking at boxes, we topped out on Wednesday at about 205 on boxes, and it looks like we ending the week around that 203 level. So with the cattle coming off a little bit, we're also seeing the hog market kind of stagnate. Whereas these cattle were in dollar range, hogs were in a $2 range. The demand aspect of everything is what's up in the air, and we're not seeing a lot of bidding for the live animal right now. Down the road, a lot of people are thinking that after that Thanksgiving holiday, we'll still continue to take a dip into into December, and then not recover until we get into the new year. So we'll see if that is the way that the cattle and hog markets react. As far as the outside markets are concerned this week, few surprises out there with economic data, news out of Europe and such that has really kind of put a twist in things. You go out there and you look at, first of all, GDP for the U.S. You know, this was supposed to include the time when the U.S. government was shut down and GDP was well above what people had expected. With a higher GDP, though, you do have talk of possible tapering out of the Fed. So whenever you have good information on the stock market, it always comes with, well, will the Fed reduce their bond buying, or will they start to taper that bond buying? And that was the case on Wednesday, and we saw a little bit of a correction in that stock market. I think we went down and hit our 20-day moving average that day and bounced off of it. Then on Thursday, you had a surprise announcement out of the European Central Bank. They came in and they cut their rates by 25 basis points. This was an unexpected move, and it caused the dollar to skyrocket. And this week, we've seen the dollar appreciate up over 81 level. Might have sights on that 83 level down the road. The charts look positive, and it looks like we do have a good rally going in there. So what does that affect? Well, with that dollar rallying, we saw the gold market come off this week. We saw the silver market come off, and those two closed the week at multiple week lows. We haven't taken out significant support that we had about a month ago or so, but we're still down around those areas with the possibility of breaking through there and making some new lows with that higher dollar that's out there. Also, energy's coming off. We saw stocks data on Wednesday, and the build is there. We have ample supplies right now, so we're continuing to see this downside or downtrend in the energy markets. Now, where's the next stopping point for crude? You do have some support around that 92 area. I wouldn't be surprised to see us go towards that next week. Like I said, good information is deemed as negative to the stock market because it brings in the possibility of tapering. And not only did we have good GDP, today we had very good non-farm payrolls. They were 100,000 more than what people had anticipated. With those higher non-farm payrolls, the initial reaction in the stock market was down. Once again, the stock market goes down because they think that the bond buying will be taken away. Towards the end of the day, though, here we're seeing us up around that 1260, 1262 level. So it did come back. It is showing well, and that's just the nature of the stock market right now, is that if you get bad data, they can brush it off because they know that the easy money policy will be in line. If you get good data, yeah, you might have a dip down and buy those dips because the tapering's not going to happen this year. With Bernanke only having, a month left, I don't think that he's going to reverse his position there. He'll leave it up to Yellen to try to tighten any kind of policy next year. So, you've got whatever comes out can be spun to the bullish side, and that's what we're seeing with the stock market right now. Over in the grains, this was supposed to be the big day when we could see the report that we hadn't seen for 2 months. So it was a big day for grain traders, and everybody was anticipating some wild moves. Well, it turned out to be a lot calmer than what people had anticipated. Starting with corn. What we got in corn was we got a rise in yield up to 160.4 yield, up from previous 150 and change, or 155 and change. So the government did acknowledge that, hey, we've got better yields out here, the crop's bigger that way. We also saw a reduction in harvested acres or planted acres as well. And it was a little bit larger than what people had anticipated. So from that standpoint, we've reduced those acres enough now that everybody's in agreement on the acres that are harvested. As far as the yield is concerned, since we did up that yield by 5+ bushels an acre, the trend on that yield is to go up another, you can go up another 1 to 2 on the January. So I think that production number, even though it took a big step up and we reduced acres, we could still see that yield creep up a little bit more, and we could still see a bigger production number, one that does surpass maybe that 14 billion bushel level. Now, with the increase in production, we were able to go in there and make some adjustments on the demand side, and most notably in exports. We were able to raise those up. We saw the 3-week export number, what was that, last week, that was a lot larger than what people had expected. Yesterday's export sales were 1.7 in corn. That was much bigger than what people had expected. So we are seeing better demand for corn at these lower prices, and the government went through and added that on the demand side, which they should have. So now where are we at with corn? All right, our carryout is still at 1.88, slightly above last year's. We brought demand or export sales up to a level that's probably one of the highest levels, whereas we can still see we can still see that corn yield increase. So when you look at the balance sheet, I think you still have a possibility of, in that January timeframe, seeing a 2 billion bushel carryout. You take corn prices today, we closed up 7 cents off of it all. Well, I think you've got to get through that 435 level on December corn to really have any significant rally, and 450 is probably going to be pretty hard to get to. I think that 450 corn price will not be attained unless you see beans run for some reason. And that's the other area where we had some surprise. Going back to corn, the other wet blanket, I think, on corn prices is going to be that world number, up 10 million metric ton. That just tells you that the world's produced it, we're still producing it, there's a lot of corn out there. If we try to price ourselves up, they're going to go somewhere else and find their corn. So I think that that's going to keep prices in check. Maybe we don't go down to that 375 level in corn anymore, but $4 is still we could still see a $4 December corn print at some time this year. I think you're probably going to be $4, $4.40 kind of area. Getting back to the beans, also in beans, all right, they lowered the harvested acres, they raised the yield, both somewhat in line with what people had thought, maybe a little bit bigger rise in yields than people had anticipated. But that brought that production number up there to an area in which they can go and look at the demand side now, and they can say, hey, our crush is going well, exports are out of this world right now, so we have to raise those numbers here on the demand side. So they put 80 million on the export side, and they put 30 million on the crush side. All kind of the highest end of guesses that people had thought of going into this report. So they stepped that demand up to some pretty lofty levels, and we were still able to raise our ending stocks from a 150 up to a 170. So from that standpoint, yes, we had a rally in beans today. We were up 30 cents at the end of the day about. Still a tight balance sheet, but have we done anything to get us outside of the 12.50 to 13.20 range? I don't think so. I think that we're going to continue to see beans in that range until we see some kind of issue out of South America. And that'll be the focus all next week, is what is happening in South America? What is going on with the weather down there? Right now, everything is very benign, great weather, so we're seeing the weather premium not priced in at all. And as long as we see that, maybe we keep around this $12.80, $13 area. We start to see some dryness come in there. We start to see some problems with the weather. I think then we're going to trade up along that upper end of the range, up around that 13.20 area. And we really need to have some confirmed crop loss to break out to the upside there. Once again, with demand, the higher prices aren't going to increase demand, the lower prices will, so we have to kind of keep prices intact here. So for the week, too, you're looking at a bean price that's up about 45 cents for the week. So pretty nice rally in the beans, but still within the ranges that we're seeing going forward. World numbers on beans, you're looking at 2 million metric ton lower. Not all that big of a deal, but like I said, in the corn, you saw 10 million metric ton better on the corn number, and that's going to be significant and kind of act as a wet blanket out there. Going forward, I would say my ranges are still $12.50 to $13.20 in beans. In the corn, $4 to $4.40. That'd be on the board. If they need to get any corn, they're going to have to use basis to get it. But remember, with basis, there's only a certain amount that they'll go to, or else they'll rail it in. And right here in Cedar Rapids, we do have the highest basis in the nation right now. How much higher can it go? That's going to be debatable. But government really finally gave us some numbers that are very believable. Gives us a nice base to go off of. Unfortunately, probably takes some volatility out of the market as well going forward. So that's what we'll have to look forward to going forward here. So that is the update for the first week of November. As always, if you have any questions about these or other markets, give us a call here at BIS Commodities. Otherwise, have a great weekend. End of broadcast.